Now, if you think private credit is hot, asset-based financing is the new game in town. KKR has been rapidly expanding its asset-based financing business, now with about $48 billion in assets since it started up in 2016. And today, we learned that KKR is leading a $500 million financing package for HarbourView Equity Partners, a $1.6 billion money manager that's known for acquiring famous music rights of artists, including Nelly and Justin Bieber and many, many more. HarbourView's founder and CEO Clarke Soares joins us now. Sherrese, when you look at this debt package here, it's interesting because when people think about hard assets, asset-based financing, they think consumer loans or auto loans. How do you start making music a part of this category?
Yeah, well, Sonali, so great to be here with you again. And so thank you so much for having me. Listen, music is a lifelong asset, right? Like, again, many of us, have the soundtracks to our lives. We have titles and songs we've been listening to for the last 50 years, and then we discover new music every single day. So music has been a long stalwart and as a part of our lives for a long period of time and really allows us to experience that every single day. That translates candidly into cash flow. You heard John Rogers talk about it. I have so much respect for that. For that platform, content is, we like to say queen, not king, but content is queen. And the reason for that really is because it is such a part of the human experience. Music royalties, music cash flows are really a royalty on the human experience. And you really want to find ways to think about financing those cash flows as we look to acquire them so that we can continue to do this work on creating liquidity around this asset class.
Now, I think the $500 million you've recently brought in, you also had a $300 million credit line that you had expanded at the end of last year. What does all of this extra capital really do for you?
Yeah, absolutely. The extra capital continues to fuel our business. We're a young firm, but we're really excited about the momentum that we've seen over the last 3 years since our inception. Our focus as a firm is to really be focused on all things in the media, entertainment, and sports arena by really focusing on being kind of a trusted partner into the economy and the creator ecosystem. We obviously started with music. We've started to do some things outside of music, which we're really excited about as well. We've made two investments in film and television production companies, again, building our ecosystem around the broader media, sports, and entertainment platform. So the recycling of capital helps us to, continue to do a really great job for our stakeholders, which are all our limited partners around the globe, including some of our big partners like the team at Apollo, who are our original LPs. But really does help us to recycle capital to continue to further this mission of investing in these great assets and being a good partner to the overall creative economy.
On one hand, you kind of have the fun part of the finance job where you get to kind of be close to these really large names in society these days. But something that's interesting in the financial world, Sherrese, is how much you've brought in now Apollo, now KKR, these massive credit giants. I think it's worth explaining for a minute here how these royalties have almost credit-like qualities.
Absolutely. Yeah. I mean, listen, we're targeting high single digit unlevered yields on a day over day basis. We are, again, if you think about our own lives, the wonderful thing about being in non-correlated investment space over the last few years, despite, many of the kind of life-changing events that we've all been through, whether it's a pandemic that's coming out of the pandemic and, inflationary periods to are we in, deflationary periods, et cetera. The one thing that you've seen be consistent and particularly shown up in our portfolio is that our cash flows have only grown, right? We have created a portfolio construction methodology that allows us to have really stable cash flows against a pool of seasoned assets. When you then talk about folks like Apollo or KKR, that really allows them to create great product investments for their clients, much of which are, obviously LPs just like ours, but also insurance companies and those of us who participate in the insurance ecosystem, which is much of the American population. And so these are good, high quality assets. They are fun, no question, but they are good, high quality assets to deliver a yield that, again, is non-correlated to the broader economy and the broader economics that we're seeing happening every single day.
Now, from what I understand about this asset class, is what does drive yields is how you pick the catalogs themselves, how those communities are developing around artists. Right now on screen, we're showing some of the ones you're involved with, Brad Paisley, Nelly, for example. When you're looking at artists to essentially invest in here, how are you picking what has staying power?
Yeah, so it's a combination of a lot of things, and I think we've talked about this in the past. To me, because there is so much technology that allows us to see how our audiences are identifying who they want to spend time with, how they want to listen, what their listening behavior is. We really do not hold ourselves out as the purveyors of culture. We believe that the audience are purveyors of culture. And so what I mean by that is, we really are following audience, and we see audience in, a variety of different places where we are fans and some places where we're emerging fans or new fans. And that's the most important to us, is really by identifying audience. And the reason why that dovetails back to exactly what we were talking about with respect to stability of cash flows is because you can basically find music and content that resonates with an audience, and that audience, to the extent that they listen, show up, and engage on a continuous basis, it's measurable, it's therefore investable, and you can see those cash flows and then have ability to forecast them into the future. So that is a big piece of how we think about our thesis. It is very data intensive, and that's largely because we are a group of very passionate investors in the broad media and entertainment space, but also with a very strong credit background. Like, that's the team that we've built. That's what we
Right.
focus on every single